Almost 80 new insider trades were filed, and we've looked through them all to find those handful that are high signal and can help us outperform. Let's go take a look. Normally we'd start out with the fancy little charts here telling us, the percent of trades that were buys and whatnot, but we're redoing some stuff on the database right now, making some improvements, so these charts aren't updating right now. So I'm gonna make some new charts here soon, and then we'll get back to looking at those. So let's just go to CEOWatcher.com for now, and we can set to bullish only. Let's look at the most recent trades coming in, or I guess the most recent day's trades coming in. This new database and new website that we're working on right now actually will update in real time. So before it was only updating once a day, and now, as you can see, we're starting to get more recent insider trades coming in. Most trades still happen after hours, or most filings happen after hours. So during the day you'll get a sprinkling, and then at like 4:30 p.m. you just get a ton of them coming in. All right, so we'll look at the purchases here, and we'll start right at the top here with Viridian Therapeutics. Here we've got a 10% owner, Fairmount Funds Management, 10% owner, as you can see, also a director, but they're buying $10 million of the stock. Now, even though if we go take a look at the filing doesn't really give us any notes down here. They're deemed a director, they have voting power, blah, blah, blah. It doesn't tell you anything of interest. If we dive into it a little bit, anytime you see a very specific number like this, like $10 million, and then let's see what the price was here, $22 even, like almost certainly that's some sort of public offering, private placement, something like that, which we can see here they announced the pricing of a $251 million public offering. So this trade is clearly a part of that, which you could go actually read the news on what the public offering was if you want to verify, but we can be pretty certain just by the fact that it's a even $10 million, it's a 10% owner who tend to participate in these, and an exact $22 value amount. Very clearly a 10% owner. As you know, historically speaking, the 10% owners and public offerings both are lower signal, so when you combine them, they're definitely lower signal. In this case, the only reason this one would be semi-interesting actually, and if this wasn't a public offering, I might actually take a deeper look at this, is that this guy's track record, or this fund's track record, is actually quite good. 50% one-year win rates, 8 out of 12 of their purchases have been wins, 14% 6-month, 8 out of 12 have been wins. We can see over here, the short term, not quite so good, but their 6-month and 1-year returns very good, boosted by this grouping right here, which we can see all kind of happened in 2023, pretty much all with actually the same stock too. So you could almost round this up into just one, kind of count it as like one trade if you wanted, which would lower their returns a little bit, but pretty good track record here. But just for me, because it's part of the public offering and because it's a 10% owner, it's just pretty much automatically a skip for me as being relatively low signal. Saba Capital Management, we've looked at 1,000 times, same story. They keep buying Ace of Gold and precious metals. I don't think there's much specific signal here. They do, when they start buying, it's worth paying attention as they have timed these buys quite well historically, but the stock's already way up since then, and gold is now starting to fizzle out a little bit potentially, so not a super high signal one there. Looking here, we got another director and 10% owner buying the stock. This one again is going to be part of a public offering, most likely. Let's see here, so 60.05. In this case, it doesn't actually tell you, that's not as even of a number that would make you think it's a public offering, but it comes with a warrant, as you can see, a warrant to purchase the stock at 48 cents. So that makes it a little more clear that it's part of an offering. And then they actually do tell you here a pipe offering down here, so a little different than a public offering, but a pipe offering there. And then we'll also be able to see 60 cents they paid. The stock closed yesterday at $1.78. So I mean, getting a massive discount, 70% discount or something like that to the purchase price. All of that will just automatically makes this like not useful for us. They were able to buy the stock way down here. They did get they signed a $1.09 billion licensing deal, which caused the stock to go from $47 up to $285, like a 500% increase or something crazy. Fallen down a little bit since then, but we normally say if you can get like a 30% discount, more power to you. In this case, they're able to buy the stock at like a 70% discount to what it's trading at right now, which of course, good work if you can get it. Unfortunately, we can't get it. The most interesting one of the day here, FTI Consulting, starting to curl up here a little bit over the last 10, 11 days here, starting to head in the right direction, even though it's had a pretty rough last year. If we look over the last 2 years, it's really had a pretty rough last 2 years, but you will notice no no insider buying going on during this time. And then now finally, with the stock falling from 215 down to 165, we see our first insider buy by Stephen Gunby here, the CEO buying the stock. First purchase in over a couple of years. Let's go see his first purchase since 2017, and you'll see we've got about 16 sales in between these two purchases. So we have a big gap between purchases. We have them, I mean, a big gap since their previous trade, even over a year gap here. And on top of all that, we have this 16 sales in between the two purchases. So we've got a very clear reversal from an insider who was doing quite a bit of selling, who is now flipped and selling at, pretty well timed selling here, who has now flipped to buying. If we look at his previous this purchase down here, we can see stock went down a little more over the next 3 months, but then was up 19% in 6 months and 66% over the next year. So a very well timed purchase on that previous purchase. We can also see his returns for his sales a little more hit or miss, though obviously this grouping up here over the long term performed quite well, but about 50-50 win rate, and it looks like his returns are going to be pretty low. Yeah, so stock has fallen about an average of 4% over the next year, which obviously if you then compare that to the S&P, that's a massive underperformance, even though it's not a huge stock drop necessarily. But this is a very high signal. This would be almost as high of a signal of insider trade as you can get. I'd probably give it a 4.5 out of 5. Not quite reaching the 5 just because not group buying, and he doesn't have a long track record. Like if he had 5 or 6 previous purchases with like really killer returns, that'd be a 5 out of 5. But I mean, this is really about as good as it can get from an insider trading perspective. Take a look here just to make sure there's no notes or anything we need to be aware of. There's nothing there, so we can go now take a look at the stock itself, which I actually have pulled up here, so we can see it's just crossed up over the 50 and 20-day moving averages, still a little bit below the 200, but starting to curl up in the very short term, which is obviously a positive signal in terms of the momentum there. If we take a look at its historical returns here, we can also see it's trading at a pretty low EV/EBITDA and PE ratio. Probably use EV/EBITDA for this, but trading at a relatively low EV/EBITDA over the last handful of years, especially over the last 3 years or so, but even over the last 5 years, trading a decent bit below its average. If we go back on a 10-year, it doesn't quite look as cheap. It's kind of more right in line with where it's at over the last 10 years. But you could maybe make the argument it's maybe a little bit undervalued here, at least optically when we look at it just quickly here. It's maybe a little bit undervalued. If we go take a look at the recent earnings calls, which just happened a few days ago or about a week ago, we can take a look and see record Q3 revenue, net income up 25%, Q3 earnings per share up 41%, but that includes some one-time factors. Adjusted EBITDA margin expanded, the SG&A expenses decreased. So all of that is looking pretty good. I mean, all this other stuff we can kind of skip, but you'll notice, I mean, look at all the share buybacks they've been doing. They've been absolutely buying back the stock since all of 2025, really bought back $345 million in Q1, $541 in Q2, and then now another $234. They've been using their entire stock repurchase program, so they have to keep increasing the amount that they're allowed to buy. So the board approved a $400 million increase back in 2020, or back in April, and then they just approved another $500 million increase because they had already used all of that $400 million share repurchase. So they increased they added an additional $500 million authorization, and they bought $234 million in Q3. So obviously that's another positive sign here. The earnings seem like they're going pretty well, which is probably why the stock has had a little bit of strength here recently. And then obviously massive share repurchases, which not all companies are very good at timing their share repurchases, but combine that with the insider buying, I think it certainly makes it even more interesting. So in this case, obviously if you wanted, you're a long-term holder here and you were really diving into the stock, you'd probably want to take quite a bit more of a look at this. But just from a high-level insider trading standpoint, I think this is a very, very high signal insider purchase. You've got the insider trade itself that's high signal, or like the insider itself, a very high signal purchase from the insider, and then you have a very obvious, kind of valuation turnaround story, whatever you want to call it here. Probably a little more like a value story of the CEO buying a potentially undervalued stock, and then they have, earnings seem to be going okay, and they have a huge stock repurchase program going on. All of that would lend itself to this being kind of fitting our value archetype that we like to have for insiders. So I think this is a very, very high signal insider trade at FTI Consult. Next up, we've got Farmers National Bank. We've got $1 million purchase here by a director, buying $1 million, increasing the holdings by 36% or 38%. So pretty notable there. Historically, doesn't look like particularly good returns. Let's go take a look here. He does have about a 2-year gap, which if we look historically, I mean, this guy has a ton of purchase history, which is nice. Probably a lot of it's really low. really small though. So you'll notice that all of these really tiny purchases, we don't actually calculate in overall returns here, which is why it only says he has like 13 trades that have 3-month returns, because all of these little tiny ones we're excluding here. But you can see he did take 2.5 years off of buying after being a pretty consistent buyer, which is interesting. And obviously the stock hasn't really done anything over those 2 years, up about 30% in 2 years, which obviously well below what the market has done. You can see that they have recently agreed to acquire Middlefield Bank Corp. So, could maybe look into that a little bit if you wanted. Historically, if we take a look at this guy's returns, not very good. 1 month and 3-month returns of 1%. 6-month returns up to 1.8%, but down negative 9% 1-year returns overall. Not very good at all, obviously. This also isn't even his biggest purchase necessarily. We've got like a $2 million purchase here, which looks to be, maybe that's the only bigger one. So, second biggest purchase is actually not too bad out of 64, though, or even if you exclude all these, second biggest out of 13 could be notable there. If we just take a quick look here, make sure there's nothing weird going on here. Nope, looks like a normal buy. I tend to be a little wary on banks. It's just not an industry I know super well. It's kind of has its own quirks and its own valuation quirks and all of that stuff that, it is kind of outside of my wheelhouse. So I tend to be pretty skeptical of these unless the insider has like wildly good track record. Then maybe I would take a deeper look. But in here, I just don't think, it's not a very high signal insider purchase, probably, only a 1 or 2 out of 5 ranking on the insider purchase. So for me, I'm not even gonna dig in anymore, as I don't think this is a very high signal insider. Moving on to Max Levchin at Coca-Cola. This one's kind of interesting only because Max Levchin, as you'll know, is the CEO of a firm and founder of a firm, and then was also one of the founders of PayPal, or he was the founder of the company that kind of merged in with PayPal. And historically, he's only really ever sold stock, and he's never, not at Coca-Cola, but the reason is Coca-Cola, they're not going to tell us right here, but he actually just joined the board at Coke about 2 weeks ago. So as you can see, all his previous, he must have been on the board at Yelp too, obviously. It's like with Stoppelman, who's the CEO over there at Yelp, who I believe also worked at PayPal. But so yeah, a director there at Yelp, and he's obviously only ever sold stock, as you can see. And then he actually recently started selling a firm, which was sales that we had highlighted, as it was interesting that, he's been the CEO of a firm, obviously, ever since they started, with no selling forever and ever and ever, and then all of a sudden starts selling right up here, right at the tippy top. So well-timed sales there. But in this case, he just recently joined the board at Coke. Obviously, he can't have that much insider info if he was just joining the board a couple of weeks ago. On top of that, Coca-Cola just is, a huge company. Unlikely to have high signal insider trading going on at such a massive, well-known company like that, that's just going to be under way more of a microscope. He only joined a month or a couple weeks ago. I don't believe, at least what I could see, I don't believe they have minimum shareholder requirements. So I don't think he's necessarily buying these because he's required to own a certain amount of the stock. But, I don't know exactly why he's buying. I don't know if it's just to kind of get some skin in the game as he's joining the board, or maybe they do have some sort of unofficial rule about how much they want you to own some stock, put your money where your mouth is type of thing. Even though, $1 million for him, nothing huge, and he's not going to have any, it just can't be high signal. He just joined the board. He can't really know very much. So that's a pretty easy skip there. This one we're also just going to skip right over just because it's part of a public offering, which, as we mentioned, lower signal historically, so we don't tend to care too much. This one says it's a dividend reinvestment, but I bet if we take a look, they're actually just telling you that some of his holdings include some dividend equivalent units. So this purchase is not necessarily a dividend reinvestment. The CFO here buying the stock, let's take a look, buying $200,000 of the stock, see if anybody else here is buying. We can see some group buying back here a little bit, actually, after a dip due to, poor earnings back here. They reported second quarter results right around that time. Obviously didn't go well. Stock fell like 17% or so, and then you had a handful of insider buying here. 5 different insiders, it looks like, buying the stock, not including this guy. So now we've had 6 insiders buying the stock here over the last few months, all buying the dip, all around the same price. So you've got some group insider buying, which is certainly notable. If we look historically, let's see what this guy's previous returns are like. Looks like he's made one purchase before relatively recently in February of 2025. Let's see how that. So it looks like the stock is down a little bit since then. Do we have the latest returns? Yeah, so down about 8% since he made that purchase earlier in the year. So by itself, obviously, this isn't a very high signal insider purchase. It is interesting when you have the CFO buying the stock, and he doesn't buy very often, though, he did buy not too long ago. and it didn't work out. So at least appear to be, so far, he hasn't proven himself to be a high signal insider. It does get higher signal when you just consider the fact that we have a group of 6 insiders here all buying this dip, and we love to see insider dip buys. One of the better signals when you have a big sell-off like that of a stock because of some catalyst, like earnings. And then you can kind of dive into the earnings and see, hey, is management saying that they believe this is temporary, and then is management putting their money where their mouth is via buybacks or via insiders buying the stock here, which we do have. So it looks like they also, if we take a look, we can dive into that one a little bit. Go here. Let's take a look at their most recent earnings. Just came out not too long ago. Must not have been as bad because the stock didn't fall off a cliff, obviously. I don't actually care so much. I mean, again, insurance is another industry, not my cup of tea, not something I know a ton about, so I'm not going to really be able to tell you much about how interesting many of these numbers are. But if we look here, we can just at least see if they've got some share repurchases going on. So it does look like they repurchased $36 million with a new $200 million authorization. Reflects confidence in capital management. So I'd actually be interested to see what they actually said. In addition, guided by our capital strength and the valuation of our stock, we will opportunistically repurchase shares as we did this quarter. We bought $36 million of repurchases in this quarter and instituted a new $200 million repurchase authorization and a 13% dividend increase. So obviously here, this is kind of what you would like to see in a stock that has been hit a little bit, is you've got the insider buying, you've got them increasing their dividend, you've got them increasing their share repurchase program. All of that would be a pretty positive signal. A couple things that would be holding me back here are just the insurance industry. I don't know that well, and typically when it's those kind of industries that I don't know that well, and they don't have, and you're kind of banking on like a turnaround situation, I would want very, very good track record of insider buying. In this case, I just don't really see it. So they do have group insider buying, and the insiders do keep buying these dips. I mean, you got a little dip from 100 down to 90 they're buying. You've got a dip from 99 down to 80, low 80s that they're buying. You've got another dip from 90 down to 70s that they're buying. You got another dip from 90 down to 70s that they're buying. They keep buying these dips, and the stock just never goes back up, at least over the last few years. So because of that, it becomes a pass for me, though. If you knew this industry better, it might be worth taking a look, and you could dive in and be like, okay, well, with these insider buying, did they also have, because the stock, I mean, they did in the short term, the stocks did actually go up a little bit. They went from 80 back up to 100, so that's pretty good returns. It went from the 80s back up into the 90s, and then it fell back down into the 70s and back up into the 80s, except for this first one where they were buying up here in the 90s. The last 3 group buys, while the stock hasn't really, I mean, the stock's fallen a little bit since then, but they've really only fallen from, $81. It goes in the right direction for a little bit and then just crashes back down to basically the $80 mark again. So they just kind of keep going through that cycle there. So you could take a look and just see, okay, well, maybe they didn't have, are the numbers right now better for some reason at the company? Maybe they weren't doing share repurchase programs before. Maybe they weren't increasing their dividend before. Maybe their commentary was less confident before. Whatever, you could get into all that. I'm looking for a little bit of a fatter pitch. I want to make my life a little easier, especially in an industry I don't know. And so the insider buying, the lack of signal historically for the insiders buying here would make this a pass for me. Anything else here? We've a couple more insider buys here. We've got Daniel Carter at WD40 buying $200,000 of the stock. Another stock that's been struggling, another stock in a boring industry, another insider that doesn't really have any returns, doesn't have any returns at all because it's his first buy ever. Let's look here. They did get a little bit of a stock pop here after what must have been some decent earnings, but they've actually given back most of that pop, it looks like. If we just look also at this chart, not much buying recently, obviously. Again, historically, the insider buying seems okay maybe in the short term, but the stock has been, I mean, they have been buying the dips, which again, that's what you like to see out of insiders. You want to see them buying the dips, and then obviously you'd like to see the stock recovering, which in this case, bought the dip down here in April 2024, rode the stock back up in the high 200s, and then they sold it, and then the stock fell off. You like to see this pattern, bought the dip again in the low 200s, got it up to about 240, and then dipping, and now they're buying again in the high 190s now, or the high 100s now. So they do, dip buying by the insiders here, selling at the tops here. That is all interesting. The stock has just been a total stinker for quite a while now. So it is hard to get good long-term returns if your stock is consistently going down. So even though the insiders have been buying these dips, I don't think it's quite a strong enough signal from these insiders for me, especially this purchase right here. Even though this is the big, a sizable dip buy, down 25% in the last year. Just this single purchase by this director who's never bought the stock before, it isn't enough for me to want to take a stab here at kind of such a boring company without any clear reason why a company like WD-40 is going to suddenly have some massive, 30-40% return year. I need quite a bit of convincing, and I don't quite get it there. Lastly, let's take a look at Winnebago here for our last stock we'll look at. We've got a director buying the stock. If we go to Winnebago, another boring industry, slightly better performance than some of those other ones, though still down 23% in the last year and down 40% in the last 2 years, about something like that. Then a little bit of a stock pop here recently, actually more than a little bit, going from 30 up to 40. We got a solid 30% return here over the last 3 months, which obviously must have been earnings here as they swing to profit as price hikes counter weaker demands. The only insider purchase by this director here, buying post a pop, is kind of interesting. Not a purchase type that you see very often. Only the second purchase by this insider. Their last purchase, they were the CEO here at Steelcase, I believe. They bought the stock last in 2022. Very good returns on that. 70%, almost 1 year returns. Definitely like to see that. Tons of selling before. So this was obviously, this is one of those high signal insider purchases here, just based on the virtue or on the fact that the insider had whatever this is, like 19 or something sales in a row, and then suddenly making a purchase. That's always gonna make you pay attention when they've sold the stock that many times and then suddenly decide to buy. Now we've got another scenario where they've got a big gap here. Not quite as, we don't really know what they were doing between, I don't know exactly when they left Steelcase and when they joined Winnebago, so it's a little harder to know how compelling this gap here is, but a 3-year gap is definitely something to take a note on and probably worth taking a look at if you find the stock compelling enough. So no notable notes in the Form 4 filing there. What else do we want to look at here? So overall, this insider return, so obviously 70%, another pretty high signal actually, insider return here. Not quite as good as the one before. Not quite as good as that one because he had very specifically gone from 16 sells in a row to a purchase at the same company too. Not quite the same here, but similar in that it's the first purchase in a while, lots of selling before, and the one other previous purchase actually went pretty good. Now if we go look at the story, I think we'll find the story is also not quite as interesting. You got the dip buy here, obviously this big gap up is going to move it above all the moving averages there. If we look at the valuation though, you'll notice that the valuation here is quite a bit higher. When at that consulting company, I guess it is the FTI Consulting, they were at a local low over the last 5 years, or at least well below their median, which is not the case here where they are obviously much higher up. And if you look over 10 years, they're still pretty high up on still well above their median, price to earnings and EBITDA multiple. So not as cheap of a company here. It wasn't even cheap before the stock pop, but definitely not as cheap post stock pop now. Sure, if we look at their recent earnings, which was just last week, we can see what caused them to pop so much. EBITDA margins going up, a bunch of segment breakouts. I don't care quite as much. Guidance reflects. So here's the big one. The adjusted EPS guidance up 41% year over year is a massive, obviously, due to margin improvements and cost savings. So looks like they're cutting costs, and I believe based on that Wall Street Journal article, it looks like they're raising prices too, which isn't necessarily the most bullish for long-term growth in the RV industry, which obviously consumers, the economy is a little unsure about the health of the consumer right now. So I don't know how many Winnebagos are being purchased, but mostly driven by lowering costs and increasing prices, which makes their margin go up, which makes their earnings go up, which makes their guidance go up 41%, which is why you get a massive pop in the stock price. So if you wanted to take a little bit deeper dive here, it's probably worth taking a look through these earnings and just seeing how you feel about the RV space. For me, I don't know. That's a pretty tough ask for me to get excited about kind of an RV company post a 30%, an RV company that appears slightly expensive, at least on first blush, looking at just kind of their historical returns or their historical valuation numbers. And then obviously you also have this 30% pop you already have to contend with, but obviously it was trading at $70 not too long ago, which would be a quite a nice return, obviously, if they're able to get up there. However, you can see their earnings estimates were way higher. So while their guidance went up quite a bit, it's nowhere near, you know, I mean, it is way down since the end of 2023 is still way down. So I don't know, for me, this one's kind of on the line, and just like the insider trade is actually very high signal and makes it pretty interesting. But I'm kind of wary just in general of like Winnebago. I don't know if that industry would take quite a bit to convince me that it's going to have pretty compelling returns, and then you combine that with the fact that it's slightly expensive and the stock's already popped quite a bit after earnings. And to me, I'm probably leaning towards staying away from this one, but it is right on the fence and it is pretty interesting. So you could go take a look at CEOWatcher.com, look through all the insider trades for yourself, see them update in real time, set all your filters, all that fun stuff, and it'll also sign you up for the daily morning email so you can get all of the most interesting insider trades emailed to you each day. Don't forget to like and subscribe, and we'll see you next time.